So let me now introduce you to how to use TradingView for checking on the market analysis and so on. So if you're using your desktop, laptop, or a tablet, go to your browser, whether Chrome, Firefox, and the other. We have many browsers. So just go and search on TradingView, right? Just search that. Just search that and come and click on chart. Alright, you can see now we have the chart over here. Just give it some minutes to completely load. Just a few minutes for it to completely load. Let's give it a few minutes. This is on Apple stock. These are stock Apple. So you can see how it is. You wait for this this chart to load completely. So when you come to the chart, this is just like the graph we were using back in schools. We had the X and Y axis. So here we have price and we have time over here. So it's time against what? Prices. We have price here, we have time over here, right? So now once your chart is like this, just look somewhere here. We have somewhere hidden bar we have there, just slightly above the ADJ right there. Click there for you now to have a full screen. Then checking on your screen, down here you can see we have some things here. Allow me first to log in with that so that we can be able to proceed well without interferences. So that's done. I have my full screen. So as I have just said, below here we have things which make our charts to look not that clean. So you just come to your left, to your bottom left, come to your bottom left, then you can go down there. You are going to see the delete icon. Click on it, then click on remove indicator. Then you can see now our chart is very clear. You can see our chart is very clear. Now if you want something like gold, just type on your screen XAUUSD, just type and then come to the forex.com or under any of them. It's okay, it's okay, you just use any, right? If you don't want to just type manually on your keyboard, click now here where we have the name, and then once you click there, you can edit and type now what you want, right? If it's GBP USD, you type there, come and click on it. You're going to see a variety. These are brokers. Wanda is a broker, forex.com is a broker, Paperstone, Capital.com, IC Markets. These are brokers. We have brokers who now are featured in TradingView, but they are few. So let's use Oanda in this case. I click on Oanda. I'm now going to see the chart for Great Britain pound against the US dollar. The time frame here you can see is 1D, that is daily. So here is where we have our time frame. Let's start from where we have time frames. So once you click there, the time frames are going to appear here. You just scroll down, scroll there. Now we have time frames which we are going to be using mostly, like we start with monthly. So we have this star, you click on it that way. Weekly time frame, daily, 4 hours, and then 1 hour, and later maybe you can add 15 minutes. So now This will help us do what we call the top-down analysis. We start from the higher time frames coming to lower time frames. You can see now here they are. Here are now your time frames. They are all here. If you want to change your chart, you click on this. If you want your chart to be in a line graph, you just click there. If you want to change it back to candlestick, click there, you change it back. Here we have tools. Here we have tools which you need to use. As I had earlier said, here we have time. Time is here, and here we have now the prices. So you can see the time frames. You can just change them as you wish. Now coming to the tools. As for now, the tool which I will be showing you and which you need to use as for now is the trend line. The trend line. We will check on and see what a trend line is as we continue. So trend line is on the second dot 1, 2. It's on the second. How can I put it? But the main point there is for you to understand it. So it's on that the second one. So you just click, then you come and add it to your favorites. Here it is now. This is now a trend line. So if I come to this market and just see the markets, and I just draw a line over here, that line will show me the market direct. If I just draw a line, it's going to show me the market direction, and that is now what we call a trend line. That is now what we call a trend line. So let's just come back to where we have our notes and check on a few things before we can proceed. So what is a trend line? What is a trend line? A trend line, this is a line drawn on the chart to connect a series of what prices through a diagonal line, or you can define it as a diagonal line that connects prices on the chart. You can define it in different ways. The most important thing is just for you to understand what a trend line is. They are commonly used in technical analysis to visualize or predict price movement in the financial market. Trend lines, they help identify the direction of a trend and can be drawn on the charts by connecting two or more points. So that means you need at least 2 points for it to be a valid trend line, right? And about a trend now is about the market direction, right? So once you just go to the charts and check on the market and you draw a line, if the line is going up, you can basically say that the market is going up, that is an uptrend. If it's down, downtrend. Or if it's not, or if it's trading inside a range, you say that one is now what, a range in market or a consolidation, right? There are 3 main types of trend lines on this. It doesn't matter that much, so we'll skip that and continue. We come now to the importances of trend lines. The first one is identifying the trend direction. Trend direction, now this is now where the market is going. Is it uptrend, downtrend, or what? Sideways, right? And with this you can do it. So like in this case, you have the market moving this way. Why is it not functioning over there? So let me just come back and use a different one. Euro AUD. Let me use this one, because the other one I don't know why it's not functioning. Let me use this one. So like in this case, I just pick a trend line and see, and if I just draw the trend line over here, I just draw it, right? By drawing it, it's now showing me that the market is doing what? The market is going down, right? I have identified what? The trend, the market trend on the market direction. Number 2, support and resistance. Trend lines act as support and resistance. We have support trend line and also we have what? Resistance trend line, right? And this support, this is where you buy, and resistance is where we sell, right? The basic knowledge in technical analysis, we say that you buy low, sell high. Buy low, sell high. Number 3, entry and exit points. You can use trend lines to enter your trades for buys or for sells, and also you can use trend lines as your target points for you to exit the market which you are already in, right? Number 4 is about trend reversal signals. So you can use them to know when the market is about to change. Let's say the market has been going up. You can use a trend line to know when the market is about to change and start selling. That is now about reversal. Reverse is change. Uh, Enhancing risk management. They can help you now to know how to place your stop losses, right? Yeah. Confirmation tools on this, combining trend lines with indicators like RSI, MACD, or Fibonacci retracement enhances accuracy in predicting potential market movements. As for me, I don't use indicators at all, so I don't check on them at all. The last point is that they act as what? Psychological impact. Uh, the market will mostly play with the impatient traders and on trend lines levels. Someone will see the market has hit the trend and they will rush to buy or sell, and the market maybe will break and then come back and continue now with the anticipated what? Direction. So you need to be very keen on that. Those are the importances of trend lines. Then let's check on the steps to follow when drawing trend lines. Steps to follow when drawing trend lines. The first one is identify the trend, identify the market trend, but that is not the first one. So I should have the first one as what? Define your time, define your time frame. That is now after you have made your choice. I'm going to analyze on this pair. You define your time frame, right? After you define your time frame, the second one I think should be zoom in your charts. That's the second step. And now the third one now should be the identify the trend. Identify the market trend. Is the market in an uptrend, downtrend, or in a consolidation? Right? Yeah, you determine the market trend. Determine the market trend. That is okay. Then after you have identified the market trend, you do what? Select the key swing points. For an uptrend, connect the higher lows. I'll show you what those higher lows are. So you connect them, and for downtrend you connect the lower highs. Then you do what? You plot or draw the trend line. Connect at least two significant points. Connect at least two. Draw the trend line by connecting two or more swing points. That is it. Extend the trend line. So you leave the trend line extended for future prices. Adjust for precisions. So you do adjustments. Let's say you have drawn and the market has only had two touches, and you see maybe if I move this point to this, I'll have 3 or 4 touches. You just do the adjustments, because we say that the more the touches, the stronger the level, right? Confirm the trend line strength. So confirmation of the trend line strength is now based on what? The number of touches. A strong trend line should touch 3 or more what? A strong trend line should touch 3 or more times. The other point, watch for breakouts and retests. Watch for breakouts and retests. A breakout above or below trend line may signal a trend reversal or continuation. Look for a retest of the broken trend line to confirm the new trend direction. If you had a trend line and the market superpasses it and then comes back, that is now what we call a retest. Yeah. Rules for drawing trend lines. Rules. Use at least 2 points. So that means for a valid trend line, you need a minimum of 2 points. That the trend line should touch at least 2 points. Follow the trend direction. That means you can only draw trend lines in a trending market. A trending market is the market which is moving, and that can be either uptrend or downtrend. Avoid forcing trend lines. You should draw them freely. Don't force trend lines. Don't force, and they should be at angles of between 30 to 45 degrees. If you have something which is something like on 90 degrees, that's not okay. Focus on candle bodies. Focus on candle bodies, not just wicks. But in most cases, while I'm doing my analysis, I normally use the wicks for me. The more touches, the stronger the trend line. Know that. Maintain a reasonable angle. I've just mentioned that should be above 30 degrees to 45 degrees for stability. Extend trend lines in the future. I also talked about that. Avoid cutting through candlesticks. Right, the bodies, make sure you don't cut across the candlestick bodies. Combine with the other indicators for that. Continuously adjust, and since the market is moving, so you do adjustments every time the market makes moves. Now let's get to the technical part of it, or the practical part of it. I just choose this one. But on that side, I've shown you about the time frames, how to have them there as your favorite, and also how to have your trend line there. Cause for now, we will be using we are going to be using a trend line, right? Now, in this case, we have done the first thing. We have identified what we have said. We are going to analyze Euro USD. We have already selected our pair, which is now Euro USD. Number 2, define your time frame. So in this case, let's say our time frame is going to be 4 hours. You can see now how our chart is. It's not that much well visible for us. So we do what? We zoom in our charts. So if you are using your mouse, you can do that. Right? If you are using the touch pad, just try bringing your figures together. Yeah, so like that one, and then also you can play with the prices. So while the market is like that, I believe now you can clearly see it how it's doing. So you have done that. Now identify the swing points. You can see, like in this case, swing points, the highest. Let's say we are going for the highest points. We are going for the highest points. Yeah. It's not a must for you to highlight them this way, but for now, let's just do that. And when you get used to it, you just look and you can spot them, right? So you can see. Those are now the points over there. So now you take your trend line, that line which looks like it's landing. You connect the lowest point through there. Just connect those points. Now you can see we have a trend line. So once you are done, you can maybe clear. You can clear these ones which you had used there, and just clear them. You have seen now you have connected the swing now to the swing high, the lowest point to the highest point. Now look, do we have 2 touches? The market has touched our trend line twice. That's very correct. Now we try and check, is there anywhere we can move our trend line to at least to have 3 touches? And in this case, I can see no, because if I'm to bring it here, it will have cut through these ones. So which is not that bad, but I better leave it that way. And since the market was here, I leave it extended now. I extend it a little bit for future for future prices. What else? I don't think there is anything else we have not done. So you just follow those simple steps and rules and you are done doing that. So I come here, connect the lowest point all the way to that, and I'm done. You can see I have 1, 2 touches. We have said at least 2, and that's it. Now what the market has given me, and you can see this one is if you check this well, you are going to see it's kind of 45 degrees. It's not something which is 90 degrees or what. So you draw trend lines when the market is trending. You draw trend lines when the market is trending. Those are now what we call trend lines. The upper trend line, we call it a resistance. Resistance trend line, and this one is, we call it a resistance, and resistance is now where we sell, and the one below here, the bottom, we call it now support, and support trend line. And now at support is now where we normally buy. We say that we buy low, sell high. Sell when the market is highest, buy when the market is lowest. That is the basic understanding in this. So now we have checked on trend lines. Let's check on something we call market trends. Market trends. Market trends. Market what? Market trends. Market trends. And talking about trends, this is the overall market direction. We have 3 types of market trends. Types of market trends, we have 3. The first one, we call it an uptrend. The second one, we call it a downtrend, and the third one, we call it a sideways or consolidation or ranging market, which has different names, or ranging market. So these are now the 3 types of market trends. Those are the 3 market trends. Those are the 3 market trends. Those are the 3 market trends. Market trends. Market trend refers to the general direction in which financial market or asset price is moving over a period of time. Uptrend or bullish trend. It indicates that buyers are dominating the markets, signals a strong demand for the asset. If it's a GBP USD, that shows there's a lot of demand for the pound against the dollar, right? So that means buyers are in control. If you are in an uptrend, it indicates that. How do we know that this is an uptrend? It is characterized by what? A series of what? Higher highs and higher lows. Higher highs and higher lows. We will check on that. It is characterized by a series of higher highs and higher lows. The second one is the one we are calling a downtrend. A downtrend is characterized by a series of lower highs and lower lows. Indicates that sellers are in control and signals weakening demand or supply is strong. Yeah. So if it's in a downtrend, we normally look for more selling opportunities. Sideways or range or what we call now consolidation. It is characterized by what? Equal highs and equal lows within an horizontal zone. That means neither buyers nor sellers have clear control. They kind of have equal power, right? That is now what we call um, consolidation. How to identify market trends? Use trend lines to connect swing highs and swing lows, right? Observe price action patterns like higher highs, higher lows. Just check on the behavior. That's how you can identify it. Indicators like this, RSI, MACD, all this. About indicators, I don't don't follow them, but you can do that. You can do your own research on using indicators. So identify the market trend. So identify price structure, higher highs and lows or lows. Nothing much. Draw trend lines, connecting, identify key support, candlesticks, patterns. So now let's just go to the practical part. For that, we start with the uptrend. Remember, we have said in an uptrend, the market is moving towards the upper direction, and it's characterized by what? A series of higher highs and higher lows. So this is how now the market is moving. If you come and see the market moving this way, know that we are in an uptrend. And how you can do it best, you just have a trend line. Connect from the lowest point to the highest point. Remember to observe the trend line steps and rules while doing that. So by doing that, at the end of the day, we will come up with something of this sort, and this one we call it a channel, where the market is trending inside or where the market is traveling in. We call that one a channel, and we'll talk more on that. So now here I'll talk of the lower side. We call it higher lows. Higher lows. Why do we call it higher lows? Since we are on an uptrend, or we are going up, that's the reason we are calling it higher. But here is the lowest part. That's why it's lows, right? It's higher lows. When we go to the other side, let me first clone and do something. So higher lows. When we go to the other side, which is the high point, we are now going to call them higher highs. These ones now are higher highs. These are now higher highs. Clone. Alright, so that is how it is. So basically, what all this means is that if you check on this low, right? Let me use this arrow for pointer. If you check on this if you check on this low, it's higher compared to the previous one, right? And if you check on this low, it's on high point compared to the previous one. That's why we are calling them higher lows. Now coming to the highs, if you check on this high, it's higher compared to the previous one. Same to this, it's at a high point compared to the previous one. I hope you have gotten the point on that. So that is it for an uptrend. This is now an uptrend. That is it for uptrend. Or what we have called a bullish bullish. If you hear the word bullish, that means buy. Bullish trend, right? That is it for an uptrend or a bullish trend. We have the second one, which is now a downtrend. So in an uptrend, we can draw what? Trend lines, right? Now we have the second one, which we call downtrend or bearish trend. bearish trend. Now on that, the market is now moving towards the lower side. So the market is now giving higher lows and lower lows. So since the market is going down, that's why it's giving lows. It's giving lows on the higher part, on the high side or the highest side. The market will be giving highs which are lower compared to the previous ones. That's why they are called what? Lower highs. Here, that is now where we are going to have our highs, and as you can just see from there, each high keeps declining from the previous one. Each high keeps declining from the previous one. That's why we are calling them what? Higher, not higher but lower highs. For downtrend they are lower highs and lower lows. For the uptrend is the opposite. So if this will be confusing you, just know one and say the other one is now the opposite of that. So for this one now, here we are going to have lower. We start with lower, since you are coming down. Lower highs. It's going down, but now the highest point of it. That's why we have it as a lower high. That is it. And then here we are going now to have lower lows. Lower lows. Lower lows on this. Lower lows, clone. If you check on each low, you will see it's lower compared to the previous one. That's why we are calling them the lower lows, right? Yeah, so if you check on this low, you can see this low is lower compared to the previous one. Same to this. This low is at a low point compared to the previous one. This one is at a low point compared to the previous one. Coming to the highest points, you will see this high is at a low point compared to the previous. This high is at a low point compared to the previous. This high is at a low point compared to the previous one. That's why we are calling them the lower highs. Now, we have what we call the support and what? Resistance trend lines. Support and resistance trend lines. So this line now is the resistance, and the resistance acts as what we call as a ceiling. It prevents prices from going from continuing to go up. That is now the work of what? A ceiling, preventing something as it not working. Clone. Alright, so for that one is now the support. For that one is now what we are calling a support. This is a support trend line. The line, the entire line, we call it a support trend line. And then we have now the what? The lower lows there. We have the lower highs there. On the other side, the lower line, we call it a support, and the upper one we call it a resistance trend line. So basically, I believe you can see that we normally sell at resistance. So you can see you buy here, when the market reaches the resistance, you sell. You buy at support, sell at resistance. Same thing is applying here. Buy at support, sell at what? Resistance. That's what is happening. Now coming to now this one. This is now an uptrend. You can clearly see that the market is giving what? Higher highs over here and higher lows at the support. And you can see once the market hits the support, it buys. And if you are in an uptrend, buys are more. Buys are more. When we are in an uptrend, the buys are more. Same thing applies when we are in a downtrend, sales are more. Like just look on this, the market is coming down, so the sales are more, or they have more pressure, right? Sales are more when we are coming, or when we are in a downtrend. Buys are more in an uptrend. That is basically the idea behind it. So you can clearly see. So you just check on the charts and you spot trends, and then you just draw your trend lines or you plot them. I've shown you about uptrend, down and downtrend. It's uptrend and downtrend. So what I show you last is about consolidation or arranging market. I'll use a trend line, and also I'll use something else, because mostly I don't advise people to use trend lines while plotting or drawing consolidation. In a consolidation, the market will be moving this way. The market will be moving in a range. It will be going up, down, up, down. It has no clear direction. That is now what we call a consolidation. The upper part is now what? The upper part is the resistance. The upper part is the resistance. The lower is the support. Here is the support. Okay, let me just do it differently, because it might not be what? It might be not what I've just, it might not be a trend line, so it might be something else. So on the upper side we have what? Equal eyes, equal eyes. That is now on the upper side, and that is what helps you identify now the market is in what? The market is in a consolidation. And here we have equal lows, right? So that is how consolidation looks like. And also it can be this way. Instead of trend lines, you can use a zone there, which is drawn using a rectangle. You can have a zone which is drawn using a rectangle instead of using trend lines, and that is what I mostly advise people to use, zones. As we continue, you will know why. So that is it, equal highs and equal lows. The lower part is what we call a support zone. Because why we call it a zone? Because market is coming it to it many times, so we call it a zone. So the lower one, out at the lower side, we call it a support zone. You have a support zone, and the upper one, we call it a resistance zone. Resistance zone. That one. Yeah, so guys, I believe you have learned something today. That's it from me today, guys. Kindly check on it, and if you are having your laptops, try and practice on that. If you have any question, you can just DM using the number in the description there. For those who don't have the who don't have laptops to use TradingView, desktops or tablets, I'll be doing it for the mobile phone, so I'll upload the video on the same. Yeah, for now that's enough. It's your mentor signing out. Bye bye. Don't forget to subscribe, share with your friends, like, and also comment. Bye bye.